Mohamed, how about that PCA print from about 30 minutes ago?
Yeah, this is bad news, it's bad news. And it's bad news across the board. It's bad for the economy, it's bad for livelihoods, it's bad for bonds, it's bad for stocks. It is just bad news.
Put it all together for January. Where does it leave this Fed?
Behind yet again, and for the third time in this cycle. I think right now they're going to have a very serious discussion as to not only should they have done 50 last time, which they should they do 50 next? And it's a really tough discussion.
You said going into the last meeting they needed to go 50. You thought they'd go 25. Chairman Powell in that meeting talked about the disinflationary process beginning. Then we all read the minutes. You counted how many times he said disinflation in the news conference, 11, right?
Right.
Then in the minutes, 0.
Right.
What's going on there?
So, I refer back to what you said yesterday, is the question, can they massage, that's the word you use, massage the minutes to reflect subsequent data? I don't know, maybe Mike McKee can tell us, but the minutes were not consistent with the message of the press release. But I think even this word disinflation can't be said anymore. Inflation is heading the wrong way.
So January data, bad on the inflation front, good on the output front. To see claims where they are, unemployment at 3.4%, wage growth still in and around where it is. We've got payrolls where 517,000, just phenomenal numbers here, Mohamed. Do you think that continues? Do you see signs, evidence that that's durable through the next couple of months?
So we see evidence that the economy is slowing, and that's a real issue, because you don't want the Fed to be forced to hike a lot into a slowing economy. So we are seeing evidence that the economy is slowing, but the labor market remains really strong. So it is a very difficult economy to read. I just want to stress, this is a very difficult economy to read. I could sit right here and give you 3 scenarios for growth, 3 scenarios for inflation, and 3 scenarios for monetary policy. Now think of how many interactions you get in this 3+3. This is a really tough environment both to predict and to invest.
Where does that leave this market if we seriously start talking about a Fed accepting 3 to 4? In reality, do people start doubting their ability to land at 3 to 4?
I think people are already doubting. Look at what's been happening to every inflation indicator. It is heading now the wrong way. The market indicators started heading the wrong way, the break-evens. Now we're seeing actual and survey indicators are heading the wrong way. So I think the market and, more importantly, people in the street are starting to doubt whether the Fed can deliver the 2%.